everyone. Welcome back for episode 4 of Odds Are, your weekly S&P options forecast. I'm your host, Chris Torres. For all those lovers of volatility out there, last week was your week. We had highs, we had lows, we had everything in between. And in the end, a whole lot of nothing. The market only settled 30 points higher than it did last Friday, but between the start and the end of the week, we had plenty of activity to keep all the bulls and bears on edge. Don't take my word for it, let me show you. All right, so you can see here that the market did go up early in the week and breached that 38.96 level. It then pulled back below that level and continued downward until it breached the 37.47 level, continued on and then hit the brakes and reversed again, winding up at 38.39 by the end of the week. So not a lot at the end of the day has changed, so it doesn't really tell us anything, right? Wrong. If you've been paying attention, you'll remember a few weeks ago we had a similar setup where the market breached the upper breach point first and then went on to breach the lower breach point. And we interpreted that to be a very bearish signal, basically representing the sentiment as the week progressed. And sure enough, the following week had plenty of red to spare. So we're looking at possibly seeing that same setup for the coming week. But that's just one indicator. Let's take a look now at our moving averages. You can see here now that the short-term moving averages have flipped again. It went from bullish to neutral to bearish. Also notice that the medium-term and long-term moving averages are still steady, flashing green, which is in line with how these markets will, tend to move. You don't get a huge change on all three of these levels. It tends to hit one, then the other, kind of like a domino effect. So the next step in this progression would logically be for the medium-term moving averages to go to neutral. And then if this move continues downward, then that would flip to bearish, and so on and so forth. So we're going to keep, an eye on that as we progress forward in the weeks. Let's look now here at the breach points for this coming week. You can see we have a 37.37 lower breach point and a 39.28 upper breach point. The odds haven't changed. We're still at around 81.28% odds that the market will breach one of these two levels. And you're going to see also later on when we overlap the settlement range how these breach points correlate with the expected settlement range, and how it's interesting that we have the same pattern as we had last week. But we'll wait till I put that image on the screen for you. First thing I want to reintroduce actually is the parabolic SAR. So last week we didn't even bother putting it up there. We were in that week where we were waiting for the effects of the crossover from the previous week. But now we're fresh again. We're putting on a new number here, 3959.25. That is the number to watch. It's obviously above the market because we are now in a downward move. So if the market were to go up and cross that 3959.25 level, then that would indicate a reversal of the downward movement and possibly a continuation of the longer term upward movement. So we'll see what happens. If it doesn't breach that level, then next week, as you know, then that parabolic SAR will come down. It'll get tighter, closer to the market, and it'll continue trailing downward until eventually it intersects with where the market's currently at, when the market finally does take its next leg upward, which we all know eventually it will. Just how these things work. All right, let's add now the settlement range. All right, we have an expected settlement range here of 37.35 to 39.08. As I mentioned before, pay close attention to how close the lower settlement range is, the limit there at 37.35, to the expected breach point of 37.37. Those are pretty close, only 2 points apart, but then also notice we have a repetitive pattern where the breach point to the top side is above the expected settlement range. I didn't think that that was going to happen last week, that it would actually breach the upper level. I thought it had better odds of it breaching the lower level. Little did I know it was going to do both. But will it do it again 2 weeks in a row? We'll see. And Before we get into my favorite part of the show, I'm going to put this relative view out there for you so you can see all of the numbers in one place relative to the recent market performance. All right, and now we're going to get into didn't see that one coming. I was wrong. I really thought that the market was going to go down and breach that lower 37.47 level, and that it did not have very good odds of breaching the upper breach point of 38.96. And the market said, hold my beer. It went straight up, it breached that point, and then turned around only to show that it basically could. I mean, there was a lot of news going on. There's a lot of different people that, depends on who you speak to on the street and which investment banker you pull off to the side during your next coffee break, assuming you have that network of friends. I sure don't. Everybody's going to give you a different story. There's so much tension in the market right now. I mean, this thing could really go one way or the other. But I did not see it coming that the market was going to breach to that top side level. That being said, I also did not see that after it breached below the 37.47 level, it turned back around with some strength, the second half of the day on Friday. And it just continued to go up and up and up. And it seemed like it just wanted to get a reset. Like this week just did not go according to plan. And it just wanted to get reset to where it was previously. I like to personify the markets sometime and really think there's a lot of people out there pushing the buttons and algorithms, but people pushing the buttons, and eventually human psychology is going to shine through. And so I think that this week was actually a good example of that, where the market didn't really know which way it was going to go, and so in the end it decided to go nowhere. But we're going to wrap up now with the quote of the week, and the quote of the week is from Ray Dalio. Yes, the iconic hedge fund manager. He says, "He who lives by the crystal ball will eat shattered glass." I'm still picking a couple of pieces of glass out of my teeth this week, but that happens, and it's humbling for us to remember that no matter how accurate our systems may be, even 80% of the time, you just have to be ready for that 1 week where you're going to be wrong. Now, I wasn't completely wrong, and that doesn't really mean anything, because unless you're following my actual trades, then no money was gained or lost on your part. At least I hope not. But it just reminds you. It lets you know that you have to be prepared for when the market says, I'm not going to do what you expect me to do, and take advantage of the times when it does. With that in mind, enjoy your week, be safe, and I'll see you guys here next week.